Happy New Year. Today is January the 8th, 2024. In this video, we're just going to be talking about my portfolio, all the different holdings that I have, pretty much how much I've earned in dividends, why I started investing, and when. So if we just go ahead and get right into it. So I started this portfolio September the 5th, 2023, just by depositing $200 a month. I deposit $100 on the 8th and $100 on the 23rd of every month. So since today is the 8th of January, I have already made my $100 deposit. First $100 deposit for the month. So current net worth of the portfolio currently is $973.21. If you're also curious on what I'm holding, here goes all my holdings. I hold a total of 17 different holdings. 3 of those holdings are ETFs and the rest are stocks. Here they go on the list right here. If you're curious on what brokerage this is M1 Finance, but more on that later. Also, if you're curious on how much I've earned in dividends, let's see here. The total amount of earned dividends from year to date of starting is $4.77. And at the bottom here, you can also see in each category how much I have earned. So comparing my portfolio for the first week of the stock market being open of 2024, I'm currently in the red by 0.31%, while the S&P 500 in the last week is up 0.40% in the last pretty much 5 days, so call it a week. All right. If you're only here for that quick little piece, I appreciate you clicking onto the video. Make sure you subscribe, like. If you got any comments for me, please put them in there. Critique my portfolio, so on and so forth. But the video is not ending here. We're just going to continue on. So currently, I have a total of $669.57 invested into the portfolio, which is currently up in the green by 19.04% from starting this portfolio on September the 5th of last year. And I've also have $74.86 in unrealized market gains. I don't plan on selling this portfolio at all. The whole goal for this portfolio is to build it up to where in the future I can start living off of the dividends that this portfolio earns, and so on and so forth. You know, the call it the investment dream, right? So just touching on M1 Finance here, this is the brokerage that I did choose to use instead of Webull and Robinhood and all the other ones there. I felt like it fits me a lot better. Looks more appealing to me, of course, and definitely gives you the opportunity to separate each and every category of your portfolio, as you see that I have here. I got my ETFs, industrial, consumer, so on and so forth. If you want to use the same brokerage as me, you can go in the link in the description. It is a referral link, and if you want to use it, it'll be greatly appreciated. If you don't, I still appreciate you being here. So let's just go ahead and touch on my holdings, really. Not much really went on in the market. The last 2 months of 2023 was just a very, what would you call it? I wouldn't say it's skyrocketing, but a very decent 2 months, right? Everybody's portfolio should have been up at least 15-20% on those 2 months. Everybody was getting in the market. And for me, instead of reinvesting our continuously investing for those 2 months, I just saved my pretty much my investments in cash. So when the market comes back down to a neutral level, I'll start back reinvesting. But at the moment, I'm holding my investment as cash, waiting for things to come down. I don't want to dollar cost average up when I could just wait and dollar cost average down, right? So currently my ETS, the value of this portfolio, a slice of the portfolio, is $150.22. I currently hold 3 ETFs, like I said, SCHD, SPY, and VOO. I know VOO and SPY contradict each other. They both follow the S&P 500. One has a higher expense ratio than another, and they pretty much get the same performance. Don't know why. Let me not say I don't know why. When I first started investing, I just put both of them in there because I knew they had some sort of differences to them. I just couldn't figure out which one I wanted to hold for the long term. Sooner or later, I will come to the decision on which one I should hold for the long term and continuously reinvest into that one, and so on and so forth. But currently, these are my 3 holdings. If you're curious on my average share price for each one of these holdings, so my SCHD average share price is $70.73. Current market value for SCHD is $76.82. And I've also earned 65 cents from SCHD by itself from starting this portfolio. Now, if we go to SPY here, my average share price for SPY is currently $438.85. I've earned a total of 2 cents in dividends from this one holding. And then for VOO, Let's see here. VOO, my average share price for VOO is $403.76. I've also earned 22 cents in earned dividends from this investment here, and current market price for VO is $436.13. Okay, if you were here a few months ago, I used to have the ETF QQQ in this portfolio as well, but unfortunately I did sell it just because it just didn't fit my risk tolerance. I didn't see myself holding it for that long. It was I think it was like 48% of the QQQ holdings was tech, and I didn't want my portfolio to be that much tech when I don't even personally hold too many tech stocks. Okay, which we will touch on here later. All right, so after our ETFs, we got our industrial slice here. In this slice, we have 4 different holdings in here. I have had 2 learning experiences just from this slice right here. So the first learning experience was my Caterpillar holding. When I first started investing in September, I bought in pretty much at the time the high of Caterpillar, which was at around $295 share price. Slowly right after that, the Caterpillar stock has started plummeting down all the way down to, I think it was down 30% at one time, and from there I just started dollar cost averaging. So now my new dollar cost averaging or dollar cost average per share right now is $252.70, and the current market price for Caterpillar is $292.25. Learning experience for me, the thing that I did learn is to take evaluation or learn more about evaluation as a new or somewhat of a rookie investor. Evaluation wasn't something I was too wasn't the first thing on my books, right? Say like that. I wanted to get started in investing. I didn't want to wait for the perfect opportunity. I didn't really want to time the market. I just wanted to get into the market. And some may say that was a bad decision, but as you can see, over time, it's working out, right? I've also earned 8 cents from this one holding, so dividends are coming in from Caterpillar slowly but surely. So my second learning lesson was going to be 3M, or is going to be 3M. With 3M, I invested into it in September. I think about a month later, they got hit with a pretty decently sized lawsuit. I can't remember how much exactly it was off the top of my head at the moment. I think it was anywhere from like $5 to $7 million. I may be exaggerating that number by a little bit. I can't really remember off the top of my head, but reason I say that was a learning experience. And it also had the CFO step down as well in the company. Reason I say this was a learning experience is because I was only allocating about 10% of the investment, which I'll explain a little bit more. My 10% allocation that was meant to go into this investment or this stock, I cut it down short to 5%, so that's why there's not much value into the stock, which it says only $11.06. If I would have bought the dip when it went down to $80 per share, I would probably have a larger holding in this portfolio or this stock by itself, but I dollar cost average down from like 110, 115 where I was previously when it dropped down 30% to 80 to $85 a share. Instead of buying more, I kind of freaked out, and gratefully I didn't sell, but I was on the verge of selling the stock, right? So that was a learning experience for me. Once I see opportunities like that, it should be my standpoint on, instead of just running away, look in depth into it, see what other companies in the same category, if they had the same issues, how did they recover, and also pretty much reinvest, dollar cost average down, and pretty much that should have been the game plan. But as a rookie investor, you make mistakes, and we learn from those mistakes as clearly. So pretty much my average share price for 3M now is $94.20. Current share price, market price for 3M is $108.86. And I've also earned a total of 15 cents in earned dividends from this one holding. Okay, so my next 2 holdings here, Lockheed Martin and Waste Management. So with Waste Management, current average share price is $157.36. Market price right now is $178.24. I have also earned a total of 15 cents from this stock. I have also earned a total of 15 cents in earned dividends from this one holding. Sorry about that. Don't do any editing here, just to let you guys know. I like to keep things very raw. With waste management, I want this to be the biggest or largest holding in my portfolio. The reason it is not right now is because I forgot which month it was, but when I was down on Caterpillar, I only had $20 in value invested in Caterpillar. When it went down by 30-40%, I pretty much doubled the size of my holdings from $20 to another $40. Or added another $20 on top of the 20 to make it $40 that I had invested. So that's how I got my dollar cost average price down to 252 or whatever it was previously. So now once waste management comes down to a lower evaluation, I will put a little bit more money into it, make sure or try to make it my largest holding in the industrial slice. But other than that, pretty decent stock, no issues from it, no learning experiences from it just yet. Lucky Martin, same thing, no issues, no learning experiences from it just yet. Still think it's a pretty decent company, a pretty strong company, good enough to be in my portfolio, say like that. So current average share price right now on this holding is $434.45. Market value for the stock is $458.60, and I've also earned a total of 23 cents in earned dividends on this one holding. Okay, so that's my industrial stocks here. So overall for my industrial stocks, I'm up 17.76%. And I also have $14.21 in unrealized market gains, which I don't plan on selling. I plan on reinvesting and earning dividends from this one slice. Just to touch on the allocations as well. So, for example, since I deposited $100 on the 8th and 23rd of every month, let's say I was to go ahead and just buy all my holdings at one time. M1 Finance gives you the ability to allocate how much you want to go into each and every one of your investments. So if I have $100 and I buy $100 of all these slices that I do have, 26% of the $100 will go to my dividend ETFs, 15% of that will go to my industrials, 17% will go to my consumers, so on and so forth. So technically $17, $15, and $26, right? So since we're going to consumer next, 17% of my investment will go into consumer. So then these two stocks will separate the 17%, which will be $17. So Costco will get 60% of the 17, and then Home Depot will get the rest. Okay, but touching on these two holdings now, Costco, great investment. Have no problems with it at all. It did pretty much jump up on the last 2 months of 2023, November and December. So current average share price for this stock right now is $551.22. Market value for the stock right now is $661.69. Total earned dividends from the stock is $1.44. So reason it is so high is because Costco is going to do a special dividend of $15 per share. I don't have a full share just yet, barely a tenth of a share. So right now, this will probably be my largest dividend from Costco for a little while. But hey, I'd rather get those special dividends than not, and just slowly bringing in the income, right? The passive income, the whole game plan. All right. So touching on Home Depot now. So for Home Depot, no issues with it neither. No learning experiences. But right now, average share price for Home Depot is $298.61. Market value for the stock right now is $347.93, and I've also earned 31 cents in earned dividends from this one stock here. But overall, for my consumers, my two consumer stocks, I'm currently up 27.15% and $19.10 in unrealized market gains. So slowly but surely, passive income is rolling through. I know Costco hasn't paid out their special dividend yet with M1 Finance. If you hit that X date, it will consider it as an earned dividend. It just hasn't been paid out fully. So it's not like it's not coming, but it will come here eventually in the coming few weeks. All right. So next up, my tech stocks, which touching on tech, I don't hold too many tech stocks. I think these are pretty much as good as it's going to get for me. If you have any tech stocks that you want to recommend me take a look at, I don't mind looking at it. Just put a thing in the comments, and hey, I'll take a look at the holding, see if it's something that I may be interested into in the future, and invest it and add it to it. Any of the categories of my holdings, if you have something that may be a better option, put it in the comments. I most definitely will check it out. So yeah, touching on my tech stocks. First one, we're going to look at Microsoft. Average share price for Microsoft is going to be $345.48. Current market value for Microsoft is $374.69, and I have also earned a total of 5 cents in earned dividends from this one holding. So not too bad. One thing about my tech stocks, I know these are not very high dividend payers. I really don't have these holdings as dividend payers. I do think these are all three of these are great companies, no doubt about it. Main reason they are in my portfolio is to help me outperform the S&P 500, which is pretty much the whole game plan. So currently, our next holding, which is Apple, currently right now, my average share price for Apple is $181.76, and the current market value for Apple is $185.56. And I also earned a total of 4 cents in earned dividends from this one holding, which, with the dividends, with these such small amounts, looking at it, who wants to spend so much amount of money to get 4 cents out of a holding, right? For me, this is just proof of concept. This is just showing me in the future, these small investments will add up, they will compound, and sooner or later Apple will be paying me $500 every dividend payout, and you slowly got to build up to there, right? Moving on from there now, into it. Another one of my holdings. This one most definitely was up there when the market was completely green. I was up almost 40% on this one holding. But right now, my current average share price for Intuit is $534.05. Current market value for Intuit is $598.38. I've also earned a total of 1 penny in dividends. Woo-hoo! But yeah, same thing, proof of concept. It's not really here for the dividend payouts. It's really here just to help the portfolio, in pretty much percentage wise, to help me outperform the S&P 500. Trying to do it on a consistent basis, year over year basis, right? But overall, that's my tech holdings. Actually, I almost forgot one more thing to talk about. So with my tech, I am currently up 10.71%, and I have a total of $6.70 in unrealized market gains, right? Next one, my finances, or my finance slice. So right now I have 4 holdings in this slice. First one is going to be MasterCard. MasterCard is going to be a pretty long-term holding for me, but overall, current average share price for my MasterCard is going to be $395.57. Market value for my MasterCard right now is $421.98, and I've also earned a total of 8 cents in dividends off of this one holding. Next one's going to be S&P Global. My average share price for S&P Global is going to be $368.75, while the market value for S&P Global is $432.17. I've also earned a total of 5 cents in dividends just from this one holding. To talk about the last two finance stocks, two bank stocks, AXP, American Express, and JP Morgan Chase. Sorry if you hear my dog in the background. It's windy outside and he's barking. But so with these two holdings, I don't see myself holding these long term. Maybe I'll change my mind, but currently right now, these two stocks may be sales in my portfolio. What's it called? Sorry about that. He's distracting me. I don't see myself holding banks for too long. I will keep MasterCard other than that. But these two stocks right now, I'm not very comfortable in the long term. Maybe I'll hold them for a little bit longer unless I find something better. One stock that I was looking at possibly switching these two out for was Visa. But right now I feel like that's too high of an evaluation, and I'm just going to keep doing more research on these two stocks. See the bearish and the bullish points of views from other analysts and people, of course, and see which one fits me best and what decision I think personally will fit me best, right? But currently right now for American Express, my average share price for this holding is $151.16. Current market price is $189.21, and I've also earned a total of 9 cents in earned dividends from this one holding. And then JP Morgan Chase, if we go ahead and take a look at that one, my average share price for this one is $144.04. Current market value is $172.02, and I've also earned 16 cents in earned dividends just from this one holding. So pretty much my last slice out of all of my holdings, or sorry, out of the portfolio here. Let's take a look. My last slice is my real estate slice. So I do only hold one REIT at the moment. I am trying to look for another REIT, kind of single family REITs. I don't really know of any. I recently just caught interest into seeing if there are any, and if they are, how pretty much how is the business work, or how is their business working in the past few years, right? So pretty much my only holding right now is Vici, REIT wise. So my average share price for this holding is $28.60. Current value, market value is $32.08, and I also earned a total of $1.03 in earned dividends from this one holding. So yeah, overall, if you guys know any of other REITs, Realty Income, I don't know if I want to add that to my portfolio just yet. And that's pretty much one of the other bigger ones, but I feel like Vici is pretty much a better option for me when it comes down to REITs in the commercial sector. I do want to find one that is for single family homes, so on and so forth, right? So if you have any options, or any critiques, or any other stocks that I should take a look at that may fit my portfolio, put them in the comments. I'll take a look, and I possibly may add it in a future video. No clue. No said decisions just yet. Right? So, but yeah, overall on this slice right here, I'm up 15.34% with $9.71 in unrealized market gains. So yeah, that's pretty much the portfolio overall. So I do have $303 in buying power right now. So I'm just waiting for the market to cool off, go a little bit neutral for a little while, find some buying opportunities before I can invest all $300. But for now, I'm just going to continue to hold strong on all my holdings. If I make any serious decisions, you guys will be the first ones to know, of course. And then, yeah, other than that, I hope you guys enjoyed. Just to give you guys one more look at my holdings all at once. Here goes all my holdings. Go ahead, take a screenshot, take a picture, critique it. I would love to hear the criticism. If you have a bearish look on some companies, please put it in the comments. If you have a bullish look on some companies, put it in the comments. If you have any stocks that I may be interested in to take a look at, put it in the comments as well. But overall, I hope you enjoyed this video. Next video will be on either the 23rd or the 24th of January. Yeah, I hope you enjoyed. If you made it this far into this video, I do greatly appreciate you for even watching. If you haven't subscribed already, be sure to hit the subscribe button. I'll appreciate that as well. And like I said, leave a comment on anything you have to say. I do respond to comments, right? So yeah, subscribe, and I will see y'all not next week, but the week after. Peace out.